Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, April 2nd, or according to President Donald Trump, Trade Liberation Day. Announcement from the administration is expected this afternoon at 3 p.m. Central Standard Time, announcing their policies moving forward with these reciprocal tariffs. Yesterday, there was expectations in the trade for a 20% levy across the board on all imports coming into the U.S. Prices have backed off in the overnight session after yesterday's surge up. Corn prices right now, corn and beans are down 4 to 6 cents. Wheat prices are 4 to 6 lower in Chicago and in Minneapolis, pretty much steady in Kansas City. In the products, meal is down $1 to $2, while bean oil is 10 to 15 points lower. Bean oil prices did explode to the upside yesterday following reports that the biofuels industry and big oil were working together with the EPA to reconfigure the renewable fuel standard. Reports suggested that the existing biodiesel and renewable diesel blending mandates would rise from the current 3.35 billion gallons a year to somewhere in the 5.75 billion gallons annually. Combined biodiesel and renewable diesel capacity has held steady in the last 5 months at 6.5 billion gallons, well above the current blending mandated levels. Board crush margins yesterday did jump out to a 3-month high at $1.30 a bushel, while bean oil product value, that surged to a 5-month high at 44.8%. Soybean crush in the month of February announced after the close yesterday at 189 million bushels. Was in line with expectations, however, below the 193.4 from February of last year when they had one extra day given leap year. Cumulative crush in the first 6 months of the 24-25 marketing year is up 5.3%. That's in line with the USDA forecast. And right now, I don't see the USDA changing that crush estimate at 2.41 billion bushels in next week's WASDE report. Oil stocks fell 8% to 1.923 billion pounds, and that was well below expectations. In Feb 25, there was 421 million bushels of corn used in the production of ethanol. That was slightly above expectations. In addition, the January usage figures were revised up by nearly 11 million bushels as well, bringing year-to-date usage to 2.755 billion bushels. That was up 1.3% from a year ago, slightly above the USDA forecast. I do look for the USDA to raise this estimate 25 to 50 million bushels next week. Later this morning, we will get our weekly EIA report on ethanol production from last week. The heavy rains across the Chicagoland area this morning and really across the entire nation's midsection here. Cumulative totals across the southern Midwest and Ohio Valley region could reach a foot this week, producing localized flooding. Early planting efforts and even some replanting may be necessary as a result. Some rains are expected to drift into the southwestern plains, which would help improve the hard red winter wheat crop prospects. Beyond this week's wet outlook, it turns significantly drier in week 2 of April, with cooler readings in the east, warmer in the west. South America remains mostly favorable, however, we'll be on alert for more rains needed in south central regions of Brazil to support their second corn crop there. Inside trade for July corn overnight, 100-day moving average resistance just above the market at 472.5. Inside trade for July beans as well, after trading to a 5-week high yesterday. So the 100-day moving average below the market now serves as support, that coming in at 1040. New 6-week high in bean oil overnight before pulling back. The USDA export forecast is way too low, so look for another jump up in that in next week's WASDE report. And better rains across the plains will limit the upside here in wheat despite the lower acres. Thanks for listening, everyone. Have a great day.